What's up, guys? Jeff here from LiveStream Trading. In today's video, we're going to discuss a single topic, and that is, are small caps dead? Let's roll the intro and get into it. So the question as to whether small caps are dead or whether they're worth trading has a lot more depth than a simple yes or no answer. I'm going to go over a few different things that got me into trading small caps, some of the reasons why some people might be cycling out of trading that type of market, some other options that are available out there for people that still want to trade lower price stocks but want to have access to better liquidity and more money making potential. For myself, the reason I got into trading small caps was simply because 7, 8, 9 years ago, it was a very niche market. There weren't that many people actually trading it. A lot of the prop traders that I used to work with back in my early 20s would trade mid to large cap stocks for the majority. I kind of ventured into, eventually, it was actually TSX Venture stocks, which was my first sort of taste of almost like the OCT market of the Toronto Stock Exchange. And I found myself a very, very niche little strategy within that TSX Venture exchange. Unfortunately, that is no longer a valid place to trade. There's just not enough volume anymore. Basically, the edge that I had within that market was very sustainable for about 4 or 5 years, spanning from about the age of 26 until maybe the age of 30. And then from the 7 years leading after that, I moved on to trading small cap stocks. So let's first ask, why did I stop trading TSX Venture? Well, I had a really good strategy, a very interesting, unique strategy with TSX Venture stocks. They weren't super high volume, but there was a little bit of movement in them each day. And I had a very specific strategy where I would send out basket orders to 20, 30, 40 different stocks, typically 10, 20, 30 cents a share, that I would know only trade essentially within a 2-cent range. And that was more about liquidity trading, adding on the bid, getting filled, then taking it out on the ask for literally a half-cent profit. But in between that half-cent profit, I would actually get ECN rebate fees, and if I actually got the profit side, meaning if I got out of the other side, I'd also use 30, 40, 50,000 shares. So each time I did it, I would usually make somewhere between $250 and $500, and I would attempt to do maybe 5 or 10 of those a day if I could get filled. The trick to them was once you get filled on the bid, and if you're the first on the bid, which I was every morning due to the basket orders I was using, the bids were so thick, there were so many millions of shares on those 10-cent bids that if you paid close enough attention during the day, if those bids started to break down, I could actually exit the trade at break even and still make a small profit because of the liquidity rebate that I got for adding liquidity to get into the trade. So that was a very, very unique situation. And things like that, they only last for so long before other people start catching on to how you're making that money. And that was honestly probably the easiest money I've ever made trading because literally during that time, the homework was I'd pick 20, 30 stocks that trade within a very tight range and have a ton of liquidity. My values that I would look for within those stocks are if they traded between like essentially 5 to 15 or 20 cents. And then it was just a matter of setting up the Excel spreadsheet that would then have an API connected to my broker that would allow me to send a basket order of bids all at the bid price and immediately at the beginning of pre-market, so I could be the first one in line to get filled, aside from the overnight orders that were held. So that was a really unique strategy, and it worked for a long time. But like I said, all these strategies that work for a long time, they eventually do lose their edge, and that was one of those situations where it worked really well for a few good years. I spent most of my day, quite frankly, just watching YouTube videos, listening to music. I would just be paying attention to like if those bids started to break, that I would get out at break even. Even if the bid broke and it went down a cent, I could get out on the ask and get liquidity on both sides and still make $100 on a break-even trade. So there was a lot of good stuff going on with that. A lot of that had to do with the broker, the prop firm that I was using that gave pretty good liquidity rebates, the access that they gave us to the API that allowed me to use the spreadsheets to do these basket orders, and the fact that there was enough liquidity and enough volume to make that strategy work. So obviously very unique. I've actually never talked publicly about that specific strategy, but it is something that after 3, 4, 5 years started to dry up. I think institutions maybe started to catch on. Other people started to notice and do it. The more people that started to do it, the more competitive it became, the less the edge was. Eventually, the bottom fell out of the market at one point, and a lot of these stocks were just going down every day. So it just became a strategy that was unsustainable in the long run, but it was really, really nice while it lasted. So I'd say that strategy particularly is dead. There's no way I would ever go back to trading Toronto Stock Exchange Venture market anymore, which is essentially the exact same difference as like the OTC market or the pink sheets on the New York Stock Exchange, which are also phased out. I never actually did the OTC phase. I know that a lot of people had success with those during sort of a boom and bust cycle as well. That I never got into, but once again, that's another one where there was a niche there. There was, a time where there was a lot of opportunity to take advantage of that market. But once again, eventually it becomes exploited. It becomes overused, overdone. It becomes too public, too accessible to everybody, and then the edge just diminishes. That brings us over to small caps. So what brought me to small caps was, well, TSX Venture was no longer paying me the way that I needed it to. I developed a really, really good system revolving around trading small cap stocks on the New York Stock Exchange, mainly NASDAQ, as you guys know. There was way more volume, a lot more liquidity. There was a very, very strong edge that I developed, as I have in any market that I've traded, through a lot of hard work, back testing, and that got me into a place where I was able to confidently enter the market every day, pick a handful of small cap stocks that are up on the day, and have a very really, really good, solid, sound strategy on where to enter, where to exit, understanding where retail traders were going to make the mistake of either buying or selling at bad prices, where they're going to stop out. And basically my trading revolved all around picking on those areas where I know that people are going to make a mistake, enter at the wrong spot, for example, and then stop out. Let's just pretend that SPY here is a small cap stock. So it might be something like this, where we're in a downtrend. Retail longs that trade small cap stocks, typically not the most savvy, we'll say. A lot of them are newer traders. So it gives you that slight edge where you are trading against less experienced traders. And at that time, there really wasn't a whole lot of institutional trading going on in that space. So it really was a level playing field that I felt like I had a huge advantage in. So that's why I gravitated towards that market. And the reason I stuck with it is because, well, it worked so well for so long. And that does bring me to the point in the video where I say that I believe that edge has been severely diminished over the last 6 to 8 months, and it's only seemingly getting worse. So it's only natural for me to think that, from going from TSX Venture Exchange, having a nice little boom in that area, to that kind of drying up, and then, moving the cycle on to small caps, and then also seeing the OTC market kind of boom and dry up, it's starting to make me feel like there's a good chance that the small cap market is really starting to dry up, and a lot of people are shifting their focus to other areas of the market. And I certainly do not blame them, because there is a whole lot more opportunity going on right now in the futures market, like we discussed in the last video that I did for YouTube, and particularly within SPY, and even just SPY and SPY options on a day-to-day basis. And the one thing that I'm sure about is that the futures market is not going to dry up. There's always going to be tons of liquidity, tons of volume, tons of participants, and lots of volatility. So I think that this is the safest market, that if you want to get involved in something that is going to be sustainable, have long-term growth, and be scalable, this is a really place to put your focus. Now, like we talked about last time, you might be thinking, Jeff, well, I can't afford to pay $400 a share for a stock. That brings me to some of the other options that you guys have when it comes to trading along with the futures market. We have leveraged ETFs that instead of trading at $395, you can trade them at, like UVXY trades at $8 a share. We talked about QQQ and TQQQ, which trades at $20 a share. There's a couple of triple leverage SPY ETFs that also trade pretty cheap as well. So there's a few options there on different ways that you can get involved in trading the futures market, as well as potentially trading micro E-mini futures. However, I will say that with all this, if you are used to trading in the small cap market, you may have some trouble with your transition to SPY depending on how you traded the small cap market. Okay, when you're trading futures, when you're trading SPY, it's not recommended to trade against the trend. You're going to have a lot more success if you understand how bigger time frames work to determine bias and then using smaller time frame trends to enter your trades. Obviously, risk management is a huge thing, but if you have all those things in check, or if you come check us out and we teach you how to do it, you're going to find that there is a lot of opportunity even in SPY options, where if you're used to trading, for example, small cap stocks, but not getting a whole lot of follow through, well, you're going to be really pleased with what happens when you get on the right side of these types of intraday options trades. For example, let's just say for today, today was a downtrend, short bias day from the start. We had a gap down, broke a big uptrend. Daily chart had room for a move lower today. It was pretty clearly a short bias day pretty much the entire day. We'll pick out a few points here in the chart where you'll see that there were potential short signals, and we'll see how those would have played out on an options chart. So actually one of my favorite setups from today, failed flag, still short bias in all time frames, a perfect place for some shorts to get stopped out and some overhead longs to make the mistake of buying. This is one of my favorite spots of the day for the afternoon, short 398.50 just before 1 p.m. And you can go ahead and just use that lower high around 398.97 as a stop. And that was just before 1 p.m. So that would be actually just as SPY was breaking that 398.50. You could go ahead and buy some options, contracts, some puts. And look at the price of them. You're buying this just like a penny stock. You're buying a 55-cent per share contract, or 10 or 20 of them, or however many you want. You have a clear risk level there off the 36 level, which is going to be equivalent of this lower high on SPY at 399 essentially. And just look at how this plays out. I mean, this is just one example of many examples of where you can make really, really nice returns. And notice how it keeps trending. It's not like a small cap where you get like a 10-cent spike and then the thing just drops off on you and then it goes down a little bit, then just chops you up all day. There are going to be areas obviously where there is chop. That's when it's important to understand when does it make sense to take the trade, what's the context, why should it move, why should people be selling. When you put all those things together, or if you follow a group like ours, it'll give you the ideas of knowing when to look for those areas. This is where you can really take advantage of some really, really juicy risk reward scenarios that you just can't get in the small cap space today. Like, here's just one from today that in theory is a huge risk reward scenario where you're risking essentially maybe 20 cents a share and the stock goes up about $2 a share, or $1.50 a share. That's huge returns versus the risk. Like I said, there are some intricacies, some slight differences to trading small caps, but if you're just used to trading stuff that's like 50 cents or $1 or $2 a share, SPY options is an interesting way to go, as long as your risk management is on point and as long as you know how to read the SPY chart and take the signals accordingly on SPY. So what I do if I'm trading a contract, I'll just look for where my short signal will be on SPY. If it's a break at 398.46, then I'm going to be buying the same equivalent flag on the options contract chart. I got my risk level set, buy the exact amount of contracts to risk, what I'm willing to risk on the trade given how good the setup is, and then just let it play out. Now, in addition to that, there's multiple places where you could buy for even smaller trades throughout the day. Like you could probably scalp a spot like that if you want it to be more like, this is a 398 put. So it was trading at around 398.50. It does not have to get to 398 for you to get paid. You can take partial profits along the way, just like you would with stocks. Every one contract that you buy is the equivalent of 100 shares of the underlying. So if you bought, let's say, one contract of SPY at 55 cents, just one contract, it would give you $1 per penny that it moves. So if you buy 10, it's like having 1,000 shares of a 55-cent stock. It's going to give you $10 for every penny that it moves. So in this case, if you had 10 contracts at 55 and you sold them at 255, that is a $2,000 profit in theory on about a $200 risk. Now, it's just not that often anymore, if at all, that I really see this type of setup happen on small caps. And that's what really attracted me to small caps in the beginning, was all of these opportunities where there was such minimal risk with such large reward, where there was a lot of areas where you'd see shorts get trapped into a lot of weakness, and you could clearly see where they were getting trapped under VWAP, and you know they need to cover when it breaks that key area, and you can get that tightened higher low where you just have this really good scenario where you're going to risk very little in a very high probability situation to make a lot. And the unfortunate truth, in my opinion, and I'd love to hear you guys' opinion in the comments below, is these types of trades just are not happening anymore in the small cap space. So why not bring it to an area where there's more liquidity, more daily volatility, and has bigger earning potential, but more importantly, is probably not going to boom and bust. I mean, I don't really see a situation where we're not going to be able to trade futures or SPY contracts anymore. I think that this is a very interesting way for someone with a very small account, maybe $2,000, $3,000, $4,000, $5,000 to get started and actually grow their account quite a bit faster than they would with small caps. That's of course with the right guidance, with the right strategy, and being very, very heavily focused on risk management versus getting chopped up in some small cap stocks that are barely doing any volume anymore. So that's my personal opinion. I'd love to hear what you guys think. Please comment down below. Let me know. If you guys enjoyed this video, please like, subscribe. I'm going to try to post a couple videos a week, maybe a watch list video where we discuss the macro and the short-term view of SPY, where it's going in the next day or the next week. I'll bring up some other topics as well, which will help you guys with your trading along the way. But if you're looking for that immediate guidance, you want signals, entry and exit signals, live trading guidance on the stream and in chat, I am exclusively trading SPY right now in SPY options, loving every minute of it. It's completely rejuvenated and just rebirthed my love for trading. Is everything that I want in my trading with the volatility that I desire, and I cannot explain how excited I am about it. So if you can get excited about it, if you're interested in it, hit me up. Today is the last day of our Cyber Monday sale, so probably the best chance for you to get in really cheap with us. Give it a shot for a month, see how you like it. Take advantage of all of our video lesson content. We have thousands of videos. I've made videos on how to trade options as well if you're interested in that. If you prefer to trade SPY, follow along with SPY, follow along with the leverage ETF. Learn how these things trade, because once you learn how SPY trades, you can pretty much trade anything. It's really, really fairly straightforward. And one of the things that I love about trading SPY is that it always has the volume. So a lot of the time, even if you get a signal, as long as it's a good signal, you'll usually get at least one target out of it, even on the worst trades. So a lot of the time, if it's like a bad trade, you might get a target or two, then kind of break even it. But it's very liquid. It's awesome. There's very, very, very little chance of getting one of those crazy small cap moves where you get halted. It's pretty much never going to happen where you get halted out and like 3/4 of your account's gone in 10 minutes. That's not going to happen if you're careful. It's a very, very fun, interesting, and liquid market to trade in. And as you guys can tell, I'm pretty excited about it. So this is the next phase for me. TSX Venture, TSX Venture, skip the OCC cycle, small caps, no futures. And I don't really picture myself really going back to exclusively trading small caps. If things do pick up in that space, I'll certainly look at them again. But as long as we're in a market where there's a lot of intraday volatility and a lot of intraday opportunity, you really can get everything you need and more out of this market. So I'm going to leave you guys at that for today. Good luck with your trading tomorrow, guys. I don't have time to go over the setups and charts, but I'll have something for you a little bit later this week. And I'm looking forward to talking to you all soon. So trade safe and take care, guys.